Welcome back. Now, in 2014, Kenya's fiscal authorities intend to take another shot at reintroducing, or more accurately, reactivating capital gains taxes as part of a broader review of the country's Income Tax Act. In a November 15th letter to the International Monetary Fund, the Finance Secretary, Henry Rotich, and the Central Bank Governor, Njuguna Ndung'u, said, and I quote, "Amendment to the Income Tax Act to broaden its base to capital gains and intensify efforts to collect rental income tax should translate into better revenue mobilization." End of quote. Now, this is the continuation of a two-pronged drive to boost Kenya's overall tax revenues, which are roughly 21% of GDP. Since 2012, the government has aggressively pursued taxes due on rental income from Kenya's fast-growing real estate sector. Kenya has laws on capital gains taxes on the books, but its implementation has been frozen since 1985. In initiating a review of capital gains taxes in June 2013, Kenya's Finance Secretary said it would allow wealthier members of society to make, quote, a token contribution to Kenya's tax fall. However, when a government has been progressively raising taxes and they can't account for at least $3 billion of what it has spent, there's plenty of resistance ahead.
We would prefer not to have capital gains tax, and that's the reason for this is because there is so much of a regulatory burden already on the industry. We still feel that our tax is not innovative enough. It's not stimulating the growth of the industry, and this is not just in the building industry. We tend to be focusing on collection very much and going back to the same people in the formal sector who are paying tax and coming back over and over again to the same lot instead of increasing the net and also increasing the number of people who are viable taxpayers. So that's a general problem that we have. And so when we think of an additional tax, we think, you know, who's paying attention to our growth as businesses? Who's paying attention to supporting SMEs and others get to the next level and scale? Having said that, we do recognize as an industry that the capital gains tax, that Kenya is actually an exception, not just in our region, but actually in many countries in the world, by not having a capital gains tax. What we would like to see is that it not be used as a way to fill a gap, that it be progressive, that it be reasonable, and that it be phased in such a way that it's not punitive.